Hey guys, welcome back. We're still doing the November 2017 question paper. In this video, we're going to be looking at budgets, which is the last question of the November 2017 question paper. So without wasting any more time, let us jump straight into it. And I have my answer book here that I'll be answering on. So yes, let's go into the questions. You are provided with information relating to Lumber Traders, a business owned by Larry Lumber. The business sells cleaning materials for cash and on credit. They deliver goods for free of charge to local customers. The first question is explain the main purpose of a cash budget and a projected income statement. All right, so one purpose for cash budget and one purpose for projected income statement. So the main purpose for doing the projected cash budget is the purpose for this is to predict the cash inflows and cash outflows over a period of time. So you want to know that in the next 3 months, I'll be generating this amount of money in cash, and I will have to spend this amount of money in cash, and then I'll be able to see whether I'm running a deficit or a surplus, or I'm just spending everything that I'm getting. So it is to predict cash inflows and cash outflows over a period of time, all right? And then the main purpose of a projected income statement. Well, for a projected income statement, it is to predict profit. Remember, guys, that profit is not the same as cash. So it is to predict profit. So something that you will find in the projected income statement is depreciation, for example, but you will not find depreciation in the cash budget. So this one, it is to predict cash. Oh, sorry, it is not to predict cash. It is to predict profit. It is to predict profit, or rather, let me say it is to predict incomes and expenses over a period of time. So that one is easy, straightforward. And then let's move into the next question. So the next question, it's on debtors. So it says, refer to information A and B. Firstly, they say, the credit terms allow debtors to settle accounts by the end of the month following the sales transaction month. No discount is allowed. However, based on past experience, Larry expects debtors to pay according to their debtors collection schedule. So the credit terms of this business, it says, if you buy in January, you should have paid in full by the end of February. So once you are once you're not paid by the end of February, then you are not in compliance with your credit terms. So let us see what the questions say. So they say use the November figures to calculate the following: the percentage of debtors that are expected to comply with the credit terms, and then secondly, you want to calculate the percentage of bad debts. So let us see the schedule for November. So in November, we have credit sales of 224,000, and we want to see the creditors that will comply, that we expect to comply with the credit terms. So the credit terms say if you buy in November, you should have paid by December. So the ones that will be in compliance will be the ones that pay in November and the ones that pay in December. And then the other ones that pay after that period, they are not in compliance. All right. And the ones that don't pay, those are the bad debts. So what you need to do then in this case would be to add 56,000 and 125,440. Those are the ones that are in compliance with the credit terms. And then we need to divide that total by 224,000, which is the amount of credit sales, and then multiply by 100 to get the total, to get the percentage of the debtors that will comply with the credit terms. Hope that is clear. So as I said, what you need to do first is to say 56,000, and then we're going to say plus 125, 440, right? And then we're going to divide by 224,000, and then we're going to multiply the whole thing by 100. And then you will get 81%. So 81%, 81% of the debtors are expected to comply with the credit terms. And then they say use the November figures to calculate the percentage of bad debts expected. So now we're calculating the percentage of the bad debts that we're expecting. So here we're saying that from the sales of November, we're expecting some people to pay 56,000 at the end of November, some people to pay 125,000 at the end of December, and then some people to pay 33,600 at the end of January. And then after that, we do not expect anyone to actually pay. So those ones will be the bad debts. So what we then need to do is quite similar to what we did in the last question. We basically just need to add 56,000 plus 125,440 plus 36,300, and then we divide by 224,000, and then we'd be able to get the number for our bad debtors. Cool. So what we'll need to do, rather than adding that amount, so if you add all those amounts of the people that pay, then you get the good debtors. But to get the bad debtors would be, you have to subtract from that 224,000 and then see how much you will have left. So what you need to do is to take the 224,000, right? And then say, I'm going to subtract the 56,000 because these ones are not going bad, right? And then I'm going to subtract the 125,440 because they're also going to pay, so they're not going to be the bad debts. And also subtract 33,600 because even if they're paying while they are not in compliance with the credit terms, they still are not bad debts. And then any amount then that is unpaid, because you say we're paying 56,000, 125,440 is going to be paid, 33,600 is going to be paid as well. And then the remaining amount that's not being paid is the amount that will be written off as bad debts. So you will have to divide again by the 224,000 because that was the original amount. And then you multiply by 100, and then your percentage would be 4%. So you expect that 4% of the debtors will not pay. All right, cool. Now let us move on into the next question. The next question says, Larry does not believe that his debtors control clerk, Sheely, deserves a bonus on 31 October 2017. And then they say, provide evidence to support his opinion. And then secondly, offer Larry advice to improve debtors collection. 2 points. Okay, let us look why Larry might feel that their debtors clerk is not doing a good job. So the debtors clerk is to ensure that the debtors are actually in compliance with the credit terms. So if the debtors are not complying with the credit terms, then it means that Sheely is not doing a good job. So let's see if there's anything that proves that she's not doing a good job. So this is a schedule. We can sort of like calculate the people that are not in compliance, but we're also given here an age analysis by the debtors clerk. So they say October 2017, for example, they say, okay, we made sales in November 2017, and then 18% they paid in the current month, and then 40% paid the month following the month of sales, and then the others are paying in 2 months and in 3 months. We know that the credit policy of the business is that you pay at the end of the month following the month of sales. So it means that 23% plus 19% of all the debtors are not complying with the credit terms. In other words, 42% of all the debtors are not in compliance. with the credit terms. So that is a reason why I would think that she does not deserve a bonus. So the first point, to provide evidence, what we'll say, 42%, 42% all debtors do not comply with with the credit policy. They do not comply with the credit policy. Just say age analysis. So if you have 42% of all debtors not complying with the credit policy, the debtors clerk is not doing a good job. And then the second part of that question, offer letter advice to improve debtors collection, 2 points. Well, the first thing that I'd mention is that give an incentive to the people that pay early. So offer discounts for early payments. And then the other thing would just be to penalize the people that actually pay you late. So charge interest on debtors who do not comply with credit terms. Yes, so you only had to offer 2 points, but there can be many other points. For example, the screening process before you allow someone to buy on credit, you can tighten that. You can send reminders to debtors and all those, as long as your thing makes sense and it can sort of show that if you do this, you will improve the collection. We'll end this video here for now, and then we'll continue with the question in the next video. Cheers, guys. See you in the next lesson.